Good day, welcome to another What's Up with the Market. We're going to do a market status update today and just see where the markets are at. Before we do that, to tell you everything we cover here today is general investment advice, not specific or personal investment advice. That done, let's move over into beyond charts. To now do Dow Jones is where we are going to start, as we normally do. Right, what's happened since we last met? Just zoomed out a bit here, and we are looking at the last couple of years of data here. Big picture, the black dotted resistance zone at the top here is a resistance zone. That's the all-time high, and we are looking to see if the major indices in the United States are going to approach that new all-time high. The case for the upside and this bull market continuing, the secular bull market continuing, which I'll talk about next week. Next Wednesday we'll do a secular bull market update. Is that this high, this previous peak over here, is transgressed? So we rise above that and have a few ups and downs, a few peaks and troughs along the way, one or two, and then go and see if we can make a new high, if the markets can make a new high above these all-time highs. So that's where we're sideways down, really been a choppy market for quite some time now, a couple of years, and here we have this strong price action that's broken out of this downtrend that you can see between the two black channel lines. Entry signal on our SPY3 investor medium-term mechanical system, broken through this resistance, obviously found support here and is looking to make a new peak. Now this price action here on the Dow a little bit stronger than what it's been on the S&P 500 just over the last couple of days, which we'll see in a moment. But this little bit of sideways over Thanksgiving, lower volumes, people taking holidays. It's been interesting to see how the market has reacted. So I'll talk a bit about that today in terms of whether this has been the retracement that we haven't had, and the market in the short term continues to rise, which would indicate strength. Dow Jones, although slightly still outperforming the S&P 500, we can just see this blue line here, this relative strength line, showing that S&P 500 starting to outperform the Dow, which is what you typically see in a risk-on environment. But they're kind of matching each other, which is interesting in itself, and that if this was raging, we'd see the S&P 500 outperforming the Dow Jones. Right, setting the scene. I'll just zoom out a bit again to see where that all-time high is. That black resistance zone up here, all-time high in the S&P 500, reached this resistance zone here, the blue rectangle, and looking to take out that previous peak over there. Just zoom in a little bit now on the S&P 500. Obviously we've got the entry signal there. Here's the sideways movement, a little bit more sideways movement than the Dow Jones, and this little bit of hesitation, if you like, which is what I mean by the sideways movement. If this turns out to be in place of a retracement that we really should have had, this price action, strong price action here, we should have had a little bit of a retracement where sellers got into control, at least for a few days to a week. If the market now really rises from here, and that was the retracement, that really is an indication of strength. We obviously have broken out of this downward channel over here, strong price action, breakaway gap, and this is really strong. We see volatility is dropping off here on the S&P 500, indicative of a bull market. Broken back into, fell out below the bottom, the lower channel line here, and this upward rising the channel, now broken back into it again. So this is all from a pure price action perspective. This is all bullish. This really is. Looking at some breadth of market, a cumulative new high, new low. The gray line here is starting to flatten out and slightly rise. You can see that because this is a 250 stock, which is the New York Stock Exchange, the NYSE index. It's indicative here that there are more than probably half starting to rise in this new high, having new 52-week highs rather than 52-week lows. So breadth of market a little bit stronger than what it's been, but the accumulation the cumulative advanced decline is a lot stronger. So now we've got these both moving in the same direction here. So breadth of market starting to kick in now in this uptrend we've had. The number of stocks above their 150-day moving average, simple moving average, is not really telling us anything here. This is more an overbought, oversold breadth of market, but still above 50% of stocks are above their 150-day moving average. This is more telling. So this is the US dollar index, and I did talk about this when the US dollar index started rising over here. As we now see, this is starting to fall. I've got two peaks touching this red trend line down here, and you can see that the initial gradient was a bit shallower, and now it's starting to pick up and become a bit steeper as the US dollar index rises. We got this fantastic the divergence, if you like, where the stocks are rising, US dollars falling. And what we've got here, I've got this this green vertical line here. You can see this bottom chart over here is a smooth index rate of change indicator. It's an indicator of this relative strength line. So we can see the relative strength line dropping here, indicating that stocks, equities are outperforming the US dollar. And that crossover over here of this CRB indicator is a risk on signal. So you can see I've got those going back. So there was the risk on over there, just looking back historically, and we had that price action rising in equities and the US dollar index falling. And then we had the sell signal, if you like, on equities, where the US dollar the US dollar index started outperforming equities, and we had this period of weakness in equities, and now we've got the strength and the US dollar falling, and quite a strong correlation or negative correlation here between the two. So there's a risk on a signal there using this relative strength between the two markets, between equities and US dollar. Right, this is the Russell growth versus the Russell value. Throughout this period of weakness, this weakness here on the S&P 500, this bottom graph, we've had this blue line rising, which is a relative strength between Russell growth and Russell value. So Russell growth has continued to outperform Russell value through this period of weakness, which is typically a sign of strength for equities. But both have been falling, Russell growth and Russell value both been falling, both been declining, but Russell value declining by more than Russell growth. That's what that indicates. You can see there's the Russell growth falling there and the blue line rising. So that's indicative of a risk on, if you like, at equities focus. The entry signal where growth started outperforming value was here back in when it was at February 2023 this year, and it hasn't given a sell signal yet by staying up above in this blue area, staying above 90 and continuing to rise. So that is a support for the bullish case. This is the discretionary sector versus and the previous indicator that we spoke about there, growth versus value, is a sentiment indicator, if you like, sentiment valuation, and so is this the discretionary sector versus the consumer discretionary versus consumer staple. And this has stayed as a risk on throughout this period, going back to June 2023, that green vertical line there's the indicator. I've got the smooth index rate of change of the relative strength. See the blue line here, just with the naked eye, you can see it's been rising. What have I got there? I've got a moving average. On the green line is the moving average of the relative strength that's continued to rise, and this CRB is a smooth rate of change indicator on the green line, on the moving average, and that is why it's continued to stay up. So there we had weakness in the S&P 500, and there we had weakness in the consumer discretionary, but the weakness in the consumer discretionary was less than the weakness in consumer staples, which is why these two indicators have continued to rise. So when we've got consumer discretionary continuing to outperform consumer staples, even when they're both falling, is indicative of equities risk on, if you like. Now, this is a medium to long-term measurement here. It's not a short-term in and out. That is why we had the CRB continuing to rise while the consumer discretionary is falling, and now we've got a new entry signal. So what's got to happen here for the bullish case to continue is we want to see consumer discretionary break out of this downward channel, get above this upper channel line here, and then break above resistance, which is the blue, and continue to outperform. So it's doing the first step, outperforming consumer staples. So sentiment indicator there, another case for the positive, for the bullish. Another one here is the looking at the put call ratio. So this is a 250-day moving average, the blue line in the top chart here of the daily put call, and on equities And this here, this Ciroc here falling, which is the Ciroc of the 250-day, the blue line moving average here. So it's a longer term indication, is showing that that's a risk on. So more calls starting to creep in here than puts, which is a bullish sign. This is also a case for risk on for equities, and the bottom line here is the S&P 500. You can see that rise happening. So this indicator here continuing to fall like it occurred over here. Now remember that these aren't all exact science indicators that all line up and do things at the same time. We're looking at price action, we're looking at sentiment, and we're looking at breadth of market. Those three categories of indication, if you like, for an indication of what may be happening in the future. And it's now's the time to tell you that I don't use any of this to manage my portfolio. I'm a mechanical investor, active investor with a medium-term swing trading long bias, and that's the way I manage my money. And if the sentiment indicators or the breadth of market indicators start showing divergence, or sell signals, if you like, or risk off, I continue to execute the stocks that I buy in my portfolio 100% mechanically, without any discretion and looking at any of this analysis. So I provide this really as general advice on what's happening in the markets. It doesn't affect my execution and my portfolios that I have both in the United States or in Australia. Okay, looking at yields. So here we have there's the red line, the last signal, if you like, using the same. I've got on relative strength. This is the relative strength between 10-year yields and the S&P 500. So between yields, between bonds and stocks. And we can see that, I'll just zoom in a bit here, and you'll see that that bonds, the yield and 10-year treasuries is falling, and another fall over there in today's session in the United States. But we still haven't had the smooth index. You can see the relative strength line over here is continuing to fall. The green moving average is just tipped over, but not enough yet. And I've got a medium to longer term smooth index rate of change here. It hasn't yet turned over and fallen out of the blue. So with the falling of yields, we've got the rising of equities. We're looking for this indicator here to dip below the blue and to give, which would be, because it's an inversion, we are looking that would give a buy signal for equities. So at the moment we still haven't moved from the red to the green. So what will happen here is when we get this happening, that happened back here with the green, if that happens here, then that's going to be the relationship between bonds and equities also coming to the party and saying it's risk on in equities, but that hasn't happened yet. This is the VIX index, and you can see this is way down at low, right down pretty much at close to historic lows, which is also a risk on. Right, this is now we're on to the NASDAQ. So where are we with the NASDAQ? NASDAQ, I've got a relative strength line over here we look at that first before we look at price action. The S&P 500 versus the NASDAQ. And what we're looking for here is for the NASDAQ to be outperforming the S&P 500, which is indicative of people prepared to take more risk in the more risky type of stocks, which is what the NASDAQ is still seen as. And we had that entry signal back here, so following the Ciroc medium to long term, and it hasn't dipped down. So if that had fallen and fallen below the 90, come out of that blue zone, that would have been an indication that in the medium to longer term that the S&P 500 is outperforming the NASDAQ, which would be a risk-off environment. So we haven't had that. So even through this weakness here, the Ciroc indicator has stayed above, and it's smoothed so that we don't whipsaw in and out, and it stayed above. Now, if the NASDAQ continues to rise and it started outperforming the S&P 500 again, you can see we just zoom in here, it's crossed above the trend line there. If it continues to stay above and rise, this blue line, then the Ciroc will stay above. And we've also got on raw price action here, we've got an entry signal that occurred back on the 2nd of November for the NASDAQ index, and is broken out of this downward channel. It's now at resistance, and here we have this sideways movement similar to the S&P 500. The Dow has continued to rise a little bit more strongly than these two indices, and if this is the retracement, i.e. just the sideways movement, then that'll be a pretty powerful risk on and get into equities basically. So we still need to see some of the breadth of market indicators come to the party here and really get some strength going, but they're not negative. They are kind of in the middle, and what we want to see, this price action for the positive case, is to break above this resistance zone, the blue zone, and then on the NASDAQ you can see it's a lot further away. I haven't drawn it, but there's the line over there. That zone is a lot further away than what the Dow and the S&P 500 are, and that would be the real new all-time high in all three indices, would be the case for a really strong bull market. So we're not there yet. So there are some indicators that are showing weakness, a little bit of weakness, but they are showing strength. So in this case, in this stage now, the case is for strength in equities, and I've shown you what those are, but it's not a raging bull market yet. And a real test is going to come as to where the sellers get into control at these inflection points where there is resistance. But if we break through this with strength, then that's going to be a real indication that this market's going to get stronger. This is a breadth of market indicator, cumulative new high, new low for the NASDAQ has flattened out, hasn't quite turned up yet, but we do need to see this turning up to really say, right, everybody's come to the party. The cumulative advanced decline on the NASDAQ is positive. They're both going in the same direction here. We haven't got divergence. What would divergence look like? It would look like this, where the advanced decline line is falling, not making new highs, whereas the index is making new highs. That's divergence, and that typically leads to weakness, but not every bit of weakness or not every divergence says that automatically weakness in the index follows. You can see here that the breakout continued up and that divergence didn't work, but that's what we're looking for as an early sign, and there's no divergence here. We won't this is breadth of market as well on the NASDAQ. Nothing really to report here except that there are more stocks above the simple moving average. This is the semiconductor sector. This is also a sentiment indication. This little be broken out above the downward channel here, and you can see outperformance is starting to take place here of semiconductors outperforming the NASDAQ. So the NASDAQ is in itself seen as a risk-on index compared to the S&P 500. Now this is going another level. This is the semiconductor sector now getting a measurement on how it's doing relative to the NASDAQ, and if it's outperforming the NASDAQ, that's typically people are going to even riskier parts of the market and more volatile parts of the market to look for growth, and that is occurring at the moment. So that is, although this indicator hasn't turned up yet, it being medium to longer term, it is starting to flatten and turn. When this blue line here, the relative strength line, continues to rise, and this indicator then turns, then we're going to see really risk on. So what is the flip side of all of these? Is that obviously on the charts you would have seen support levels, a strong downturn, sellers getting control, those support levels getting tested again, and even the trailing stops that we got with the trailing stop that we use, and those start getting tested or even falling through them. That's the case for the downside. At the moment, there's more evidence for the upside in equities. Onto the All Ordinaries in Australia. This underperformance of the S&P 500 is gaining momentum. You can see it's much weaker. That's that blue line falling, and you can certainly see the naked eye just on raw price action hasn't broken out of this downward channel. It's got a breakout above this upper channel line. Has not happened yet. So weakness in the Australian market relatively. Let's have a look at how the Australian dollar is doing. Australian dollar relative to the US dollar has broken out, so much stronger in the Australian dollar. That's combined. There's two things happening there. One is you can see that the rise in the Australian dollar just over the last 2 or 3 sessions is a lot stronger than the weakness that was shown in the US dollar index, which is measured against a basket, the US dollar against a basket of 6 other currencies. This is just one-on-one, a dollar versus US dollar, and this is showing stronger, which means that the Australian dollar is relatively doing stronger than the remaining 5, if you like, that are in the US dollar index, which is also indicating so weakness of US dollar relative to the Australian dollar, but also some buying of the Australian dollar, is showing the strength as well, which is typically means that there may be, and we don't get to the low level of measuring where the buying of the US dollar is happening. It could just be in foreign exchange, hedging, etc., etc. But if it's starting to go into Australian stocks as well, then that would see some strength happening in the stocks, and there's no indication yet from a price action on equities that that's happening, because typically they would go into the mid-cap and the small-cap indices, which I'm not going to look at today. We will look at that when there's some action there, but the mid-cap and small-cap stocks in Australia are underperforming the large cap. And if money starts going Australian dollar, it's getting bought by offshore investors, they would typically go into the mid cap and the small cap resources and the large cap as well, but you'll get more volatility and you'll see the signs in those indices happening a lot quicker. Not happening yet. There's a little bit of a green shoot there, but too small to really bring to the session. When the green shoots turn into it's a bit more strength, we'll have a look at those sectors. But at the moment, there's nothing to talk about there. And the same with the US small and mid cap. There's a little bit of green shoots happening there. When they really take off, and I'll be keeping an eye on those, then we'll bring those into the session as well. So I can just tell you now, generally, it's small and mid cap across industrial and resources have not yet come into the market. There's not much money going on in that part of the market. But as I said, we'll bring you that when the time comes and it's relative to show it, and it's relevant to show it. Right, CRB Index. What's happening here? This is a weekly chart, a bit of weakness in the CRB Index, and you can see weakness down here against the S&P 500. So equities outperforming commodities at the moment. And gold, there's the all-time high in gold that was reached, tested, failed, and we're coming up, it looks like, for another test in gold here on its all-time high. Now, and you can see the strength that in today's session in the US as to how strong that was. There's weakness relative to stocks down here, and now some strength, a little uptick over there in gold versus stocks. Only a small uptick, and it'll be interesting to see what gold does when it reaches the all-time high. From my perspective, I don't believe that we're going to have a strong run in gold until we get into a secular bear market. And we'll talk a bit more about that next week. So expect some resistance to happen here, but in the short term, gold is certainly showing some outperformance. We'll look at the bigger picture next week in terms of gold performing in secular bull and bear markets. Silver, just silver versus gold. This is the relative strength down here at the bottom. A little bit of an uptick. Silver starting to outperform gold. It really will be a strong indication of movement into this area, not only certainly into the ETF, but also stocks, is if silver breaks out above this downtrending trend line over here. So if it gets above there, which would indicate that silver's outperforming gold, that's when we start taking note of what may be happening in the commodity space. Not happening yet. A little bit of outperformance of silver to gold, and obviously you're going to get that up and down along the way. We want to see a definite intentional breakout and a sustained, strong outperformance. Not there yet. And of course, silver also needs to break out of this downtrend that has been in. So underperformance of silver by gold for quite some time. That's going back to 2020, almost 3 years. Copper has shown weakness after this period of strength over here, weakness. And this, you can see underperformance of copper to gold here. And what we want to see, and this is what I believe will happen, is copper really needs to break out of this down channel and above these resistance lines and form an uptrend for money to start going into buying of the small and mid cap resource stocks. So Mr. Bellwether here, Dr. Copper, is not giving us any indication of that happening. And I think we'll see a simultaneous breakout here at the same time as we see money starting to go into small and mid cap resource stocks. Not happening at the moment. And ready for this bull market that started, this sort of secondary to almost primary bull market in that time frame that started in equities. We're not seeing the support coming yet from small and mid cap right across the board in the different industries and subsectors. One of the reasons for the CRB index showing weakness is oil. So oil is in this downtrend. It found resistance there at that resistance zone, which I've had in there for quite some time, and is now retraced to this support zone, very strong support zone, really between around about 72, 75 up to about 80 or even less, $77. So that's it's getting down there. There's underperformance of oil to gold, and so yeah, that's what's creeping into the CRB index and down there. So that obviously leads into things like inflation and whatever, but not too worried about that except for the energy sector of stocks. Bitcoin, we looked at this last week when somebody asked for the relationship between Bitcoin and gold. Just zooming out, you can see that there was a suggestion that there's a strong correlation between the two. If there was a very strong correlation between the two, then this blue line in the middle here, which is the ratio or relative strength between the two, would be pretty flat. So you can see there were periods. Here, total no correlation there really. certainly not in amplitude of movement, maybe a little bit in direction. But you can have a look at this analysis. You get access to this in your own version of Beyond Charts. But there's just been a little bit of the red show where they are out of sync and the black show when they're in sync. So quite a lot of black there to justify that they are in sync sometimes, and at the moment they certainly are in sync, both rising. It's gold at the bottom and that's Bitcoin at the top. But let's just have a look at what are we doing here? At the price action of Bitcoin. This is the price action that we've been looking at. There's the channel. It fell out below the channel, back into the channel, and has just got the slow, gentle rise here after the strong breakout above resistance and approaching more resistance at the 40,000 level. And we've got a risk on. There was the entry signal using a Ciroc 26.9, and is in the, well, I shouldn't call it overbought zone because it can stay up there for long periods of time, and is outperforming equities there and now basically matching equities. So they're rising, both Ethereum and Bitcoin rising. Strength is starting to come back into uranium. There's the chart, and that equity, that the gradient of the uptrend changed, came down, went sideways, found the lower channel line, is now rising strongly again in uranium. And there's the outperformance. So this here at the bottom is measuring uranium versus URA, which is the uranium ETF. And what we're seeing here is the price is outperforming the uranium ETF. So if you had been in the URA ETF for basically this last year, you certainly wouldn't have got as much growth as what you would have expected from the rise in the actual price. So, but there are uranium stocks that you can go to. A couple more charts to look at before we look at questions. Breakout. This is iron ore. Breakout out of the channel. I formed another grey channel over here. There's the all-time high back here in what date was that? That was in July 2021, and put this temporary grey channel line in here, found resistance, came back down, found support back here, broke through resistance, and is now testing this resistance at the 125, 130 level, which is that resistance zone. So if iron ore breaks out here, which is the cases that it should, it's made higher highs, higher lows, of course no guarantees on that, but if it gets above this 130, 35, 140, then we're going to have a rise, and obviously the iron ore stocks that are with it as well. Last one we'll look at is thermal coal. This is found support, 78.6% retracement, resistance here at this pretty weak resistance zone. That's why it's fallen back down to support. Interesting to see what it does from here, if it finds support here and then it goes and tests that resistance over there. So that is the state. So just in summary, if we go back to equities and the S&P, just some quick questions from there, is that this is a risk-on market. So we have some questions. Dietmar, can you comment on outperformance of gold stocks such as EVN on the ASX at the moment? Well, certainly reacting to the gold price there, Dietmar. But in fact, we can just quickly go and have a look at EVN. And that might be people preempting, trying to get in ahead of. So there's EVN there. It's still so here's relative to gold down over here. So there's the relative strength of EVN to gold, going sideways, but basically matching gold, and still in this range trading market. For EVN to really kick on, like it can do, it needs to break out above that resistance zone there, and really continue from there. So there is strength in EVN certainly, and some other stocks as well. Robin, how do we download your analysis? Very simple. In Beyond Charts, you get into Analysis Manager, so you can right click and go side panels and select Analysis Manager from here. There it is over there. Or you can, as I always do, I have it pinned over here. You can pin and unpin these side movements, so the sideways, the side panels, and you just click, that's export, you just click import SWS analyses in the Analysis Manager, and you will get all this analysis. Right, so Dietmar is saying that EVN is broken out today, so I won't get any data here for another 12 until end of day data, obviously, so it's obviously higher. So that the price I have here is 386. So I don't have today's price action here. That's yesterday's price action. Right. So it's obviously showing strength, and I suspect it's on the back of. It'll be on the back of what gold did in today's session, which is there. That's a strong. There's today's price action there in gold in the US. So that's at a breakout. It's at a higher high compared to these, taking out those 3 peaks. If I put a swing chart on here, you'll see that's a 3-day swing. That peak has been higher than that, and this low is now higher than that low, and also higher than these troughs over here as well. So that's a clear breakout on gold, and I suspect that that is what is happening, and why we do have some gold stocks in our universe of stocks that we look at. Okay, any more questions? I'll finish there. Thank you for your time and attention today. In summary, it's risk on at the moment. It's not raging at the moment, but certainly across the board on sentiment, various sentiment indicators or intermarket analysis that we do, and also breadth of market and the raw price action, is that it's a risk on market at the moment, and Australia is lagging from that relative strength chart that we saw compared to the S&P 500. We'll end it there. Thank you for your time, and as always, I wish you consistent and objective and peaceful active investing.